Hey guys, the topic of the video today is how to scale into an OTM trade, or how to risk 10 to make 90. Now I'll discuss what an OTM trade is and pricing and examples and all of that, but first, somewhere in the middle of this video, I'm going to show you where you can pick up a free gift just for watching. So let's get started. Here is our disclaimer.
Welcome to another video from TraderBot Marketplace. Before we begin, make sure you understand the following disclaimer. The risk of loss trading any financial instrument can be substantial. You must be aware and willing to accept those risks in order to invest. Don't trade with money you cannot afford to lose. TraderBot Marketplace doesn't solicit nor offers to buy or sell any financial interest. No representation is being made that any account is likely to achieve profits or losses similar to the ones discussed here. Past performance is not indicative of future results. All strategies discussed here are for illustrative purposes only and are not to be construed as specific advisory recommendations. This material is for educational purposes only. You can always find out more about TraderBot Marketplace by visiting the link below. Now, let's get to it.
Okay, before we get started, you're going to have to know what a binary option is. You're going to have to know the terms ITM, OTM, and ATM. If you don't know that, here, go to, I'll put the link in the show notes below. This is the video, everything a newbie should know about binary options in 27 minutes. It's on our channel. Let me get this here. Here is the address, but it's also going to be in the show notes down below. First, we're going to talk about how our signals come out. Now, you see these three yellow lines? These are roughly 10 pips apart, which most of our signals are, unless you're dealing with an index, which they have to be finagled a little bit. But they all have roughly the same movement apart to get an ITM, ATM, or an OTM trade. Now, these three yellow lines, since this bar here, and I'll show you in a second, this bar here and this bar was a buy, here's ATM, OTM, and ITM. Here's a picture a little bit to show you more in depth. Here's the actual signal that came out this morning on the USD CAD. We're looking at the USD CAD, and it came out with these prices, and you can see ITM down here at 130.74, ATM at 130.84, and OTM at 130.94 right here. It's a 2-hour trade. All of these are 2-hour trades. So if they're 2-hour trades and it comes out at the open of the bar, it always comes out at the open of the bar. Maybe a 8:02, 8:02. It comes out at the open of the bar, and it has 2 hours till expiry. So this bar and this bar are the two bars that we're concerned about. At the end of this bar, it expires. So here is the entry at the open of the bar. Here is the expiry at the close of the second bar. Okay. Now, this one expired. It was an OTM trade that expired in the money. So it's going to cost you less than $50 or 50 cents to get into this. OTM trades cost less. Okay. We're going to look at the price of what you can get an OTM for. Aha, stop. We got a pop quiz. Now, unless you understand this next part, don't go any further. Okay, number one, how many hours out are our binary option signals? 2 hours. They're 2-hour trades. When does the signal come? It comes at the beginning or the open of the bar. And about how far out or how many pips out are we looking to take an OTM trade? Roughly 10 pips out. Okay, now that you've got that and you understand that part, we can move on to the next part. Let's look at some pricing. How much is an OTM trade going to cost? So we're going to discuss how much will I have to pay for an OTM trade, what is my initial risk, and what is my overall risk. Let's look at a price right now about 2 hours out. Well, it's got an hour and 59 out. Okay, the price right now, the spot price is 109.68. Now, technically, 10 pips above that is going to be 109.78, but since we don't have a strike there, the only one we have to choose from is 109.76, which is $17.25 to buy it, or 109.56 on the downside, 491, which is about $9. So somewhere between 9 and 17. Technically, 10 pips out is going to be somewhere between $9 and $15. That's what it's going to be on every one of these trades. On the higher volatility trades, they're going to be a little bit more. On the lower volatility trades, they're going to be a little bit less. So for safety's sake and to go high, my initial risk on just about all of the trades is going to be about anywhere between 10 and 20. Now, what is my overall potential of profit? My profit potential is 80 to 90 if we let them expire. Now, some of these trades do not expire profitable, but they move up so much that you can take profit. We'll discuss that here in just a second as well. This morning, or this afternoon at 1 o'clock, we had a trade that moved up for a potential profit, and it did not expire OTM. However, it did move up from the time the trade opened. It moved up 20 points before pulling back. That is a considerable move, and profit taking is just fine on those. However, today we're going to talk about expiries only. Okay, so now we know that when the entry comes and out of the money, it's going to cost roughly between $10 and $20. Did this expire out of the money from this buy signal right here? It opened here and it expired here. Yes. How much is that available for buying? Well, if you can buy it somewhere between 10 and 20, we're going to go with about 15. Split the difference there. Buy it for 15. Then if it expires profitable, what is your profit? Well, expires for a profit of 85. 85. So you bought it for 15, expires for a profit of 85. Now, here's the kicker. What's the downside of OTM trades? The downside is they don't win very often. And we're going to discuss a strategy on how to make those pay off more than they usually would. So let's go look at some historical trade signals and how they expired. You can follow along and see exactly what I'm seeing as well. If you want to, all you have to do is go to traderbotmarketplace.com/forum right here. And you're going to see this this site here right now. Oh wow, we're up to 3,250 members here. That's pretty cool. Okay, you can see the binary option signal results right here. Click on it, and it's going to give you all the all the way back until September of 2016, which is when we started these. So we're going to go look and see what these look like. Okay. Yesterday, here were the results. We had 2 OTM wins. 2 OTM wins. We had a bunch of ITM wins, and we had 1 ITM loss. But the only ones that we're focused on are these 2 right here. So let's go back and let's go to the next day or the day before that. Here are the wins and losses. I'm taking a picture of these I'm going to use them in an example here in a few minutes. All we're concerned about are the 2 OTM wins right here. We're not concerned about anything else. Let's go to the day before that. We're concerned about the 2 OTM wins and nothing else, because those are going to be losses. And the day before that. Oh, there's several here. Okay. Okay, now, if you go in here and you're looking at the forum here and you go before that, it's going to be all mixed in together. I've got, well, hang on. That's when I kind of started them. You can see the ATM wins, a lot of OTM wins. You know, you can see all the OTM wins. You see all these, that's what we're looking at, OTM wins. Ones that say OTM wins only. And you can scroll down and scroll through all of that. I'm not concerned about that today. We're going to look at the past 4 days and devise a strategy. I'm having a hard time fitting all these on the screen, but you can see right here, there we go. You can see right here all of the ITM and OTM and all that win-loss rates. So we're going to count them, okay? So we're just going to take a little picture and we're going to do a little basic arithmetic. How many OTM wins are there? Count them. There are 10 OTM wins out of all of these. Okay, so we've got 10 wins so far. How many trades overall? Okay, so you can see right here that there's a 34% OTM win rate. There's 29 trades overall. Overall, there's 29 trades over the past 4 days. 34% OTM win rate just over the past 4 days. To get all the other statistics, just go on that on the forum there and look them up. Get you out a pen and paper and write it down. But we need statistics before we can go on with any of our trading. So we know there's 10 OTM wins, 29 overall trades, and a 34% OTM win rate. Now what I want you to do, over the past 4 trades, I want you to go and count the consecutive wins and consecutive losses. Like here an OTM win, and then a loss, and then a win. This is 1 consecutive win, 1 consecutive win. This is 2 consecutive wins. Okay, and here's 2 consecutive wins. So we know that the maximum consecutive wins for OTMs just over the past 4 days is 2. The most I've seen so far is 4. They lose more than they win. Okay, but you don't pay as much for them. Now go and count the consecutive losses in between the wins. In between the wins, we want to count consecutive losses. I see 2 consecutive losses in between this win and this win. And then I see 1, 2, 3, 4. We're talking about OTM losses, not anything else. We see 1, 2, 3, 3 consecutive losses between this trade and this trade. 2 consecutive losses here. Then we got 1, 2, 3, 4, 5, 6. 6 consecutive losses before another OTM win. Then we've got 2 OTM wins, not an OTM win, and then 2 more. So the maximum loss rate is 6. The maximum loss rate is 6 in between OTM wins. Now, to count up the maximum loss rate overall, go into the forum and you can do this. I'm going to open up the forum again. We're just going to look at it for a minute. We're going to try to find, 10, 12 losses in between OTMs. You're not going to find it, but just go with me for a second. Okay, we're going to look here. Now, the colors might be off, but we're looking for OTM win rates. And whenever I was doing these back here, I don't even know what that date is. Let me see. Okay, forget about these two. We're going to look for OTM win. Okay, you'll have to go back and research these. I'm not going to spend time researching them. Here's an OTM win, OTM loss, win, win, win. That's an ITM win, so it's technically an OTM loss. There was no contract there to be traded. No contract there to be traded. OTM win, OTM win. There's 1, 2, 3, 4. 4 losses in between these 2 OTM wins. Again, there's 1. I don't know if that one was a win or not, but we'll count it as a loss. 2 in between these 2. And what you're doing here is you're trying to find the maximum number of losses in between these OTM wins. And what this is going to tell you, I'm trying to find a string of them. Here's 4. Okay, here we go. 1, 2, 3, 4, 5, 6, 7, 8. There's 8 in between the OTM wins. Okay. There's that page, so there's 8. 8 is the maximum. I don't know what that is. And then here's one before. Back here, I was looking at. I think I was moving. I was looking at ATMs. I don't know if these are OTMs or not. But you can go in there and do your own research. If they're not color coded, I'm not even looking at them. Here's a bunch of OTM wins, and I will tell you that in the majority of the trades, there's going to be roughly 4 to 6 trades in between OTM wins. Go do your own research and find it out. So the majority is between 4 to 6, and the maximum we've ever had is 8. So we got 8 losses maximum in between all of these OTM wins. Okay, time for a quiz again. Okay, time for a quiz, just so you're on the same page. How much can you buy an OTM strike for on average for 2 hours out? 10 to 20 bucks, about 15 is what we're looking for. What is the OTM win rate over the past 4 days? What did we say, 34%, something like that? Okay. Had you traded every trade, what would your profit or loss be? If you got every trade for, we'll go high, we'll say 20. 29 trades times 20 bucks. Okay. 19 losses and 10 wins. 29 trades at 20 bucks each. 19 losses at 20 bucks each equals negative $380. If you're trading on Nadex, it'd be negative $3.80 on Counter Exchange. So 10 wins times 80, that's your profit, equals $800. Fees, we're just going to go at $2 a trade. We're going to go high. I know it's $1.80, but there you go. So your total profit would be $362. Okay, so your risk was technically $380. That was how much you lost on your losing trades. We're going to talk about getting this down and getting this up. Okay, we're going to talk about scaling. I told you at the beginning of this video I would give you something free. Now, if you're already a member, you've already got this. But if you are new, somebody watching this for the first time, here is what you can get for free. Just go grab it. Hang on. I'll put this link in the show notes below, but you can go to traderbotmarketplace.com/access/cart. Grab some free stuff here. What can you get for free? Well, let me show you. Number one, you can go into your downloads and you can pick up this local time generator for MT4 that allows you to see your local time on MT4, and it looks like this. See this yellow right here? Because if I'm scrolling, you can look up here too. If I'm scrolling, I can see my local time versus the MT4 time, and it is a huge help. You can also pick up a custom scale. What this does, you see how the numbers are really tiny to read over here? You can plop that on your MT4 and it'll make the numbers as big as you want them. That's awesome. Let's see, there's also this book here, Trading Barefoot. This is a book I wrote a year ago, and I detail all of the steps that I took to become profitable. And I talk about how I lived in a van, and I had a shitty experience when I was raising my first kid, and I was the story's crazy. Anyhow, you can go pick that up. We offer a whole lot of stuff for free, and we don't spam you. Last time I sent out an email was like 2 weeks ago. I don't send out marketing emails and all that bunch of bull crap. So pick up whatever you want for free. I may have some more free stuff in there by the time you see this. So just sign up for a free account. I'm not going to spam you. Now we're going to talk about a scaling in method. Now, what is scaling in? Scaling in is the act of adding to a trade or a series of trades when the trades have a higher than normal probability of producing a favorable outcome. An example, you buy a share of Apple stock. You hear that on CNBC that Apple will be releasing a time travel machine in 6 months if approval goes through, so you buy more Apple stock. Now, there's a favorable outcome that Apple, and it's not guaranteed, Apple is going to shoot through the roof if a time travel machine, happens or whatever. So you buy more. Now there's a downside. Martingale, averaging down, the gambler's fallacy, dollar cost averaging, all of these mean the same thing. What do they mean? They mean you're going to blow out your account and have nothing if you continue to do this without a strict parameter rules. Okay, so if you don't know what any of these mean, I'm going to show you just so that you know what not to do. Okay, if you're going to buy, say right here, and it moves against you and you buy more here, and it looks like it's going up, and you're like, okay, it's going to go up, and then it starts to drop, and you buy more here, and buy more here, and buy more here, and buy more here, in the hope that it's going to reverse, which it did in this situation. But it doesn't always do that. Let's look at British pound, US dollar. What happened to this thing? Okay. Let's say you had bought some here, and then bought some here, and 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 bought more, and bought more, and bought more. Come on. It's stupid. It doesn't work. Averaging down does not work, and it will blow your account. Okay, let's go back to this screen. Poop. If you average down on at the monies or in the monies, you will be doomed to failure. And I'll explain why right now. This is why if you risk 50 and that trade doesn't work out, the next one you risk 100, that one doesn't work out, the next you risk 200. If one of these pays off, you're going to make you're going to make 50. But what if you have a series or a string of losers and you just keep doubling up? You're going to lose. I mean, this is crazy. You will lose, so don't do this. Do not, under any circumstance, do this, because there's a fine line between scaling in and averaging down, dollar cost averaging, and all that. It's bullcrap. I'm gonna show you a safer way to do it. Okay, for ITMs. ITMs are even worse. If you're averaging down on an ITM trade to try to make back that loss, if you lost 80 and you're trying to make 20 on every single one, the next one you're going to have to risk is 320, then 1280, then, after a series of about 6 trades, you're up to $81,000. Stupid. Don't do it. Averaging down, martingale, doubling down, dollar cost averaging do not work. So, Mr. Smarty Pants, what does work? Okay, now let's get into what does work. Since you know what does not work and what not to do, we're gonna talk about scaling in. Okay, we know the max loss rate for these types of trades is about 8. So far it could go higher. Who knows? We also know the average loss rate between OTMs is around 4 to 5. It just depends. Sometimes 2, sometimes 3, sometimes 6. One time 8. That's fine. Now this only works for OTM trades that have a high win rate above 20% or so. You can't use this on OTMs like, for 2 hours out, 50 pips out of the market and buy it for like $3. It's not going to work. You're going to lose all your money. You need to stay within the market range. Do you know what Fibonacci is? If you do, here's some fib numbers right here. If you don't know what Fibonacci, go on Wikipedia, look up Fibonacci numbers, and they're going to be here. It's a mathematical equation, yada, yada, yada. However, here they are, and we stop. We risk no more than this right here. I'll show you what I'm talking about. But if you add all of these numbers up, it equals 20. Your maximum risk is going to be $400. When you lose, you're going to lose $400. And a loss will come at some point in the future. There's going to be more losses at some point. It will happen. When you lose 4 of these in a row, get out and walk away from the market for a day or two. Start over, because here is your maximum loss right here. If you lose this, $400, you're done. Go ahead and piss yourself off and walk away from the market. Come back in a day or two with a clear head. Now, let's say that we take several trades in a row, and what we are hoping for is for an OTM win. I'm gonna tell you how to look for the exact place to start your entry first, but we're only going to take 1, 2, 3, 4, 5, 6 trades in a row, and then we're done, because at the end of that we have lost $400, and we can write that off as just a loss and take the weekend or whatever and start over. But however, let's say there's a series of trades that come out, and then you decide, okay, I'm going to start my trade series now. I'm going to start this, and whenever I get an OTM win, it starts the whole series over. And if you put on one contract for $20 risk, we'll go high with $20 risk, and the payout is $100, your profit is $80. Okay, your profit is $80. If you win, the series starts over. Let's say you lose that trade. Well, you lose $20. Okay, on the next one, you risk 20 again. You risk 20 again, and if your payout would be 100, and your profit would be 60. Now, why would it be 60 instead of 80? Think about that for a second. Why would it be 60 instead of 80? Because you have to take into effect this 20 and this 20. 100 minus 20 minus 20 equals 60. So your overall, this is your total profit. Let me write that. Let me write that in. Total. Where am I at? Oh, what happened? Uh-oh. Hang on a second. I just lost it. Now, on your third attempt here with your 2 contracts, you have $40 at risk on this one contract. The payout's going to be $200 if the trade is profitable. And the series profit between all of these and the payout is 120. It'd be a payout of 200 minus 40 minus 20 minus 20. So your profit will be 120. On your 4th attempt here, if you win this 4th trade, your profit is going to be 160. That's a payout of 300 minus 60 minus 40 minus 20 minus 20. Okay, so it'll be a profit of 160. On your 4th, here we go. I'm sorry, on your 5th. That's a 1, 2, 3, 4, the 5th trade. On your 5th attempt here, your risk would be $100. The payout would be $500 if you win, and the series profit would be $280. It's $500 minus all of this risk. That is your series profit. On your 6th and final attempt, your profit is going to be $360. Okay, so you've got 6 tries here to make a profit. Each time that you are attempting to make a profit, your profit potential grows as well as your risk. Your risk will grow. So let's talk about risk versus profit potential. Okay, on the first one here, your risk is 20 to try to make 80. Okay, your risk is 20 to try to make 80. On your second trade, your total risk is 40 to try to make 60, about 1 to 1. Okay, so your total trade between these 2 trades and your payout is, well, not 1-to-1, but you're risking 40 to make 60. Okay. On your third attempt, your risk is 80 to try to make 120. Risk is 80 to try to make 120. Now, as we go through here, you're not risking 80 on this one trade. You're not doubling up. You're risking 40 on this one trade. The 80 is the 40 plus the 20 plus the 20, the total risk. When you bump it up to the next trade, can you guess what your total risk is going to be here to try to make 160? And furthermore, can you risk, because if you can figure out the math, then you've got it. Figure out the math for these three. I will wait for a few seconds here. You can pause it if you want to. Okay, now I'm going to give you the answers. Here are the risk amounts: 140, 240, and 400. Now, why do we stop after 6? Why do we stop and just take our loss and go home? Why do we do that? Because the total risk is now starting to get larger than the total series profit. Now, there's numerous ways you can take care of this, but you always have to continue risking more and more. And what happens if you don't stop? What happens when you have a series of 20 losses in a row? That's what kills people. So we're going to stop at 6. We're going to take our $400 loss and walk away and come back on another day fresh. So if you understand what we've been talking about here, then maybe a light bulb went on in your head. Okay, now, we're not talking about taking every single trade as an OTM. We're talking about taking a calculated risk. Now, what's the risk here? The amount of trades, the amount of maximum trades in between an OTM win? Well, it's 6. It's right here. 1, 2, 3, 4, 5, 6. 6. There's 6 trades. Most of them are not that high. A lot of them are, 3, 4, 2, 3, 4, 5. So we're not gonna take every trade. What you want to do is you want to hang on. Let me move this. Okay. You're looking for a series of 3 or so trades that haven't won in a row. Let's look for 3 that haven't won in a row. Okay. Let's just go left to right here. Here's one, and here's one. Okay, here's 3 that did not win OTM. So we're going to say this is a loser OTM, this is a loser OTM, and this is a loser OTM. On that next trade right here, start. Now you lost 20 bucks and you won on the next trade. So what is your overall win between the 2 trades? It's $60 between the 2 trades. You risked 1, lost it, risked 2, risked another one here, and you got a payout of $100 for a total profit of $60. Okay. Now let's start again. Let's look for some losses. You can do this however you want to. So that was a win. 1, 2. Oh, you missed it. You missed that one. So just start over. When you have an OTM win, it starts the series over. 1, 2. Oh, you missed that one. 1, 2. Oh, you missed that one. 1, 2, 3. Okay, now we are going to start right here, and you're going to lose that one. You're going to lose that one. You're going to lose this one. You're going to lose this one, and you're going to win that one. So on your 4th attempt here, what is your payout? You got 1, 2, 3, 4. Your total profit is $160. 160. So the first one was 60. Now it's 160. Okay. So we have a rolling profit. Let me write this in here. Rolling profit of 60 plus 160. Okay, there we go. Now, continue doing that. Wait for a series of about 3 losses. Well, we don't have any more here, but you can go do the math. Okay, so here we go. If these were the only 2 trades that we took, what would be the overall profit of the past 4 days? It's going to be $220. Now, what is your maximum risk? Your maximum risk before you start the whole thing over is $400. You're going to make a profit like this the majority of weeks. There will be some weeks that you don't, but you will make a profit the majority of weeks. You can start with not waiting 3 times. You can wait more than 3 times. This is just a guide so that you can look at, and that is what scaling in is. It is adding risk when the probability of payoff starts to rise. Okay, now, we've just been talking about the signals. I will pull up the signals here. And here they are. These are live signals, and members can scroll back through here and, see all the signals. There they are. But just for your own sake, I will let you see the signals as they came out. This is today. So we're going to scroll back through here. Okay, here. We're going to start at September the 20th, which is almost a month ago. Okay. I'm going to let you see all the signals. Then I'm going to scroll down. You can screenshot this. You can do whatever you want to. I'll give you time to screenshot it. And you can see all the signals that came out. And I know I'm scrolling through here too fast for you to write everything down, but you can screenshot these as I pause. And you will see that all the signals add up to what I have posted in the forum. There we go. Oh, sorry. And today. Okay, so now that you know that the signals in the forum add up to the exact same signals I post in the chat room, I'm going to show you how these signals are derived. I've just popped open just a default chart. You can change them to get higher probabilities if you want to, but these are how the signals are derived. These are exactly where they come from. You can see, right here, this arrow represents a signal that comes out at the beginning of the bar. It's a 2-hour signal. This is a 2-hour, and you can see that right here. It's an hourly chart. 2-hour signal, so the signal ends at the close of this signal. These are 10 pips apart, these strikes here. And this strike here represents, well, you can't see it, but represents the at the money level where the open of the bar is, and this represents OTM by 10 pips. You can set them to whatever pips you want. I'm looking back over the past 50 trades. You can do that. Now I can see right here, and I can see right now that it's got a 26% win rate. Okay, it's 1 3 in a row consecutively over the past 50 trades, and it has lost 8 in a row is the maximum that it's lost. Maximum. So if you're trading this signal alone, if you want to wait for 5 losses in a row, that's fine. But, over the past 50 trades, it's lost 8 in a row. And you can see that right here. And the reason that you don't want to go way out is because you don't want to go, 40 pips above the market where it's lost 37 times in a row. That's just stupid. You want to get this consecutive loss number down really low. I can even go further back over the last 98 trades. I can still see it's got a 26% win rate. However, I do know that the maximum consecutive losses has been 10 in a row over the past 100 trades. From time to time, there will be that series of losers there where it doesn't do it. My suspicion is that this is, caused mostly, maybe the series started during an Asian event or something like that. I don't know. During the Asian session, and you can go in there and you can change all of the parameters however you want to. I have just changed parameters. I know that this one here wins 10 pips out of the money over 2 hours 32% of the time. 32% of the time. However, over the past 76 trades, it has had 10 losses in a row. That's the maximum. Now, what if I get up here to some really ridiculous numbers? Hang on. Some people talk about wanting more trades. Well, here you go. You've got more trades. However, 18 losses in a row? I don't think so. That's stupid. It only wins 17% of the time. It's going to have to be 20% or more and a loss rate a heck of a lot less than this for me to even consider it. So more trades doesn't always mean more quality. And here's a lot of trades. It's lost 41 times in a row. You don't want that. That's stupid. Don't do that. Okay, pop quiz. So how much is our total risk? Okay, I've got 2 questions here at the same time. It's $400. So this one's void. Why do we want to stop at 6 trades in a row? Why not just go on forever? You see right here where it says 41 losses in a row right here? That's why. You don't want to run yourself into the ground. So, if it loses 6 times and doesn't make a profit, something has changed in the market. And you don't want that. You want to protect that capital. Why can't I just double up on every trade? Well, you can, but, crap. 50 turns into 100, then 200, then 400, then 800. How large is your account? Because we're not looking at this as our risk. We're not saying 1,600 is our total risk. It's the risk of everything here. 16 plus 800 plus 400 plus 200 plus 100 plus 50. Add all those up. That's your risk. That's why you don't double up. Why can't I use this with ITM trades? Do you know why? If you don't, you need to watch this whole thing over again, because ITM trades and adding size on a loser is stupid. Come on. It's ridiculous. Even though over the past 500 trades, if you took an ITM trades, even though it's only had 2 losses in a row, the risk is you have to substantially increase your trade size in order to do that. It's had 2 losses in a row over the past 500 trades, 19 wins in a row on an ITM 10 pips out. But you never know when those series of 4 losses in a row, 5, 6, 7 losses in a row are going to happen. And you just, unless you're very wealthy, you don't have the money to sustain that kind of drawdown. So I wouldn't suggest it at all, using it on ITM. Why can't I use this with Forex? Because Forex has no maximum loss level. They don't work like binaries. It doesn't work in Forex. You can add to a trade in Forex, but you don't have a fixed amount that you can lose. You can lose as much as the market moves. And as we looked in that British pound trade earlier, you can lose a lot. Okay, the last one. Did you understand everything we talked about today? Are you fully aware of everything that we talked about? If not, here's some steps you can take. If you didn't fully understand how to do this, but it intrigues you, go take a break. Come back tomorrow with a fresh mind. You got to sleep on it, because sleep, it clears your mind. Then grab a pencil and paper and come back and take notes as you watch the video again. Watch it tomorrow, because you may pick up on some things and they may make sense tomorrow that, whereas it didn't make sense today. If you did understand this, let me know. Let me know, what types of videos you want. Let me know things I'm doing right, things I'm doing wrong. But just let me know. I don't know who all's out there. I've got like 1 million views on YouTube. Yeah.